Hey everyone, before we start the video I just want to let you know this is a old video from my private mentorship of my Discord. This one was created in August 2022, so I don't call them inverse fair value gaps yet, but old gaps, and for now I hope you enjoy the video. Hey, what's going on guys? This weekend's webinar is gonna be about rebalancing and redelivering price. In my opinion, this is one of the most eye-opening things I've learned throughout the trading career. It helps determine your draw on liquidity. It helps you manage your trade. So yeah, let's dive right into it. First of all, you have to know what a fair value gap is, a liquidity void. Excuse me, a liquidity void. So if you don't know what a fair value gap is yet, make sure to watch the beginner video, right? But I'm pretty sure everyone knows. So we're gonna use some examples, especially on GJ yesterday, which was a perfect redelivery and rebalancing of price. And you'll see if you go back to the Discord chart analysis on GJ, it was pinpoint from this high to this low, and we'll go through it why this was my reasoning. But first of all, what is redelivery, right? So redelivery is something that happens once a fair value gap has been created and price comes back into that fair value gap. So let's take, for instance, this fair value gap here. This fair value gap has been created. So what is this? Only buy side liquidity, or only buy side has been provided over here. So no selling occurred in this whole area. Obviously on the lower time frame you'll see more wicks up and down, but on this 1 hour time frame there is no sell side provided. Now price will, I think, almost always come back into fair value gaps where only one side of was provided. So here's only buy side provided. Price comes back into it, and now we are redelivering price and offer sell side, right? So we have buy side only over here. Once price comes back into it over here, we have sell side provided. So price is being redelivered in that buy side imbalance. It's also called a BZ, right? Buy side imbalance, sell side inefficiency, because their sell side is inefficient because there's nothing provided. Now with the redelivery of price, price should be using this as a support, and once it does, it's redelivered and we move up. So what happens once we trade through? It's not balanced still. And why is that? Because once it has been redelivered, it should have acted as a support, right? Once we go into the sell side of the curve and trade through it, it's still unbalanced and price can reference it again and use it as a resistance. So you guys know we use overlapping fair value gap techniques, right? So why is that so high probable? And that is because the rebalancing happens over there. So rebalancing is once price trades back into that gap, once it broken through it, we'll reference it as a resistance and then trade lower. Now, why is the overlapping fair value gap technique so powerful? Because you have two PD arrays overlapping, right? So you have a fresh fair value gap. For instance, on this is the example we're going to use, and I will use NASDAQ 2 as an example later. Why is this so high probable, right? Price has created a bullish fair value gap over here, right? So we move up, have a buy side imbalance, we trade through it, and you can actually see it just goes straight through it. So this one has been redelivered, price went through it, has offered all the sell side which was not provided during this time. We trade through it, and now we have a gap which is unbalanced. So with the draw on liquidity, we look for unmitigated areas of price, right? Like order blocks, fair value gaps, and all that kind of PD arrays. You have to go with the order flow, obviously. So what are we expecting on this kind of day, right? So if I zoom out a little bit, and I will remove the text. and I will show you the redelivery of price. Let me quickly do this in another folder. Let's call it Friday, because it was Friday. Right, so let me remove that. And let's look at the redelivery of price. So every time there's an imbalance created in the form of a fair value gap, so we have a bearish fair value gap here. Once we trade through it, it's not redelivered and not rebalanced because nothing has come back into it. Now, at some point, price comes all the way back, redelivers price over here, right? So we redeliver it, we should go bearish, which happens, right? We trade through it. But what happens now? This gap will be used as a reference point for a sell. So once we redeliver it, right? We redeliver it because it has not been redelivered over here, never came into it. It should have acted as a resistance, but price comes back up into it, right? And now we can say, okay, now price has been fully rebalanced over here, and we can go trade down and look at the accuracy, right? Look at this wick and the high of this fair value gap, right? So the high of this candle is 163.509, and the high of this candle is 163.243. So 243. Oh wait, I need to do that low, of course. 238, and this one is 243. So it's a half a pip difference. So this is the accuracy of which its price has been rebalanced. So this is a fully rebalanced fair value gap right now. So we can say this high is highly unlikely to get touched at all. So we have a protected high. And obviously, using internal and external range liquidity, we can also determine it has rated internal range liquidity over here, right? This one. And then we're dropping lower, so we have a protected high. Because if you're trading with bearish order flow and you see a short-term high get rated and we drop from there, we can say, okay, the high that rated this short-term high is now a protected high. So redelivered again over here, and then another area. Price comes in, redelivers it, right? Once we trade above it and then back into it, it is rebalanced. But this did not happen, right? So we are still bearish. So same thing over here. Price is holding on, redelivering because we're creating a fair value gap, right? It struggles to go up. Once you see accumulation in or a little bit above that fair value gap, you can already be a little bit wary that this is not the gap where it's gonna retrace or go back up from. So you can see it accumulate, which is something you don't want to see when you're bullish. Then it trades through it, and then if you look at the details, let's zoom in a little bit more. You can actually see price closes below this fair value gap, and then this wick up is a rebalancing. So even though it doesn't look like it's rebalancing, once we start closing below that gap and trade back into it, we are rebalancing. So it doesn't have to fill in the whole gap. This one little wick is enough to rebalance and drop from it. Especially when price is very heavy, this tends to happen. Just a slight wick into it and then drop. So that's another example. Here we have a fair value gap which is being redelivered and then traded lower. And now looking at the future, right, what is unmitigated? We have this fair value gap which has no sell side provided. So what is our draw on liquidity going to be? This area, right? This should be a draw on liquidity. Now let's go with the rebalancing and overlap everything, right? So this is the part where the overlapping fair value gap technique becomes very good, right? Because once price has been rebalanced, we can anticipate it going lower. So especially when you have this bullish fair value gap, right? We trade through it and then eventually we come back into it. So we're trading through it down here, but this is not significant at all. Just leaving more sell side liquidity behind. So we trade back up into it. It looks rebalanced, but it has no drop from it yet. So I'm feeling like this whole move down is the area where it should rebalance from. And then you couple it up with that fresh fair value gap right over here. And then you have that overlapping part. Now extend it a little bit further. Right, price reference that same old fair value gap once more. And then we have that good displacement. Because we did trade down a little bit lower. And then this instant move down is something a telltale sign, right? A little bit of the elephant in the pool price action. So you can see the displacement happening, which indicates smart money wants to drive price lower. And then with the short-term high getting rated over here, makes more sense, right? Because right now it's has sort of equal highs here, and this high is very close to these highs. So it looks like a retail resistance. So we have to wait for more confirmation, right? Then we see trade down, but we have no confirmation yet because there's a lot of buy side liquidity. Price comes back into that old fair value gap and then starts to drop. Now we have confirmation, right? And a break of structure. Going on to this little piece of price action, right? We have this bullish fair value gap also being rebalanced over here, and then we drop. Also beautiful to see, we have an imbalance here, which got straight up traded through, right? And then look at this over here. It drops into it, and look at the bodies, right? The bodies are closing on top of it. If they close inside, that's fine too. You don't want to see it close lower. That's something I don't like to see, even though it happens over here, but this is just a very messy price action over here. Let's zoom in a little bit, and now we're gonna reference where I made my bias. Let me remove this real quick. Let me get rid of those over here, and we can have a clean little chart. Right, so this is a fresh one. So let's pop that on. So this is Friday, right? So we have previous daily high marked out and previous daily low. We are bearish, obviously. That was the bias, right? Because we had a failure swing and the displacement lower, just like I explained earlier with the rebalancing. Now, what is most likely to occur? Are we gonna take out previous daily high or previous daily low, right? So our bias is bearish, so we're gonna aim for previous daily low. Now, where are we gonna sell from? We always wanna sell from a premium, right? Now we're gonna look what is happening in the premium of the range. So let me take this whole range, right? So this is the range we're trading in. Why is that? Again, you guys know this. Once we take buy side liquidity and sell side liquidity, we have our new dealing range, right? So this is our new dealing range. We're gonna see what is happening inside premium. At first, the 1 hour time frame, we see this fair value gap, this displacement. So this our eye is focused on this area. Now, how can we refine this fair value gap? Because this fair value gap is 20 pips big. So we always try to have a little tighter stop loss, right? Which in my opinion doesn't have to, you can easily take a 20 to 30 pip stop loss if you're aiming for 100 pips, which GJ does provide on a regular. So if you look at this delivery over here, this was 120 pip delivery. So even if you have a 20 or 25 pip stop loss, that's easy 5R. So how to refine your fair value gap? We're gonna see if there's an old fair value gap or an unbalanced price, right? So this is unbalanced because we traded through it, right? We traded through it over here, and now price is gonna go back and reference this area as a resistance. So let me just grab the chart real quick, right? This one I sent in on the Discord from London trading up into this unbalanced price range, right? Like we did. Unbalanced price ranges, expect to rebalance it and then continue lower afterwards. You can see it literally coming into that unbalanced price range. Target is previous daily low, and that fully came to fruition. So this is how I determine my draw on liquidity and where the high probable areas are for delivery. Quickly going to ES2, I had the same one over here on the 15 minutes. Obviously it looks like did I delete it or no? Let me quickly check it out. Give me one little second. I'm pretty sure. Oh yeah, over here. I can see it already. 1 second. Let me copy this real quick, right? This was sent in the Discord. Right, we have the old 4-hour fair value gap. We have a PD array, a 1-hour order block inside that old fair value gap, which needs a rebalancing, right? So that was the target. Let me quickly draw it out on here. This is the 1-hour order block over here, right? Then go to the 15. Let's quickly draw out that 4-hour fair value gap. So the fair value gap is over here. Let's make it red. Right, this one. So this is our area of interest, which needs rebalancing. Let's go to the 15. And then with equity open over here, we run into that unbalanced price range, just slightly wicked into it, right? And then hit that order block. And yeah, you can see the result. This is sent in prior, right? This area over here. And then this is how price rebalances. So very powerful stuff in my opinion. One of the most important things. I got told ICT has taught it somewhere in the 2021 commentaries. I have not watched those commentaries. I did find this on my own. So obviously I'm not surprised ICT talked about it in his 2021 commentaries, but yeah, finding it on your own is really like an eye-opening thing. And I really use this for drawn liquidity and high probability areas. So make sure to backtest this. The lower time frame you go, the more it can overshoot the gaps. And I will let you see in a NASDAQ example. So right on GJ, target was previous daily low, right? Back and fully redelivering this price area. You can see literally the wick here. The low is 635, 161, 635, and then the high of this one is 161, 634. So it's 0.1 pip off, and that's a full redelivery of price over here. So that's why it's bouncing, right? Previous daily low has been taken, and that's a perfect read on price. Obviously, it's not only rebalancing and redelivering, right? It also has to do with, are we in a premium? Are we above daily opening? Right? All those things have to line up. It's not only the rebalancing of a fair value gap, right? You have to, your model consists of multiple confluences, which makes the trade high probable. So yeah, perfect example, GJ, perfect read. Now let me go to NASDAQ from Friday, which we were streaming, right? Or Thursday? Yeah, it was Thursday, right? So on the stream, we're looking for buys because we had at that time we had equal highs on ES. Now we waited for sell side liquidity rate to come back above those equal highs, even though the higher time frame was bearish, right? It was still primed to go up, so we were waiting in deep discount on the range going back up. So first attempt over here, we see price come up, break structure over here, trade lower, right? And then we have this bullish fair value gap, which should have acted as a support, right? So to move up again, we trade through it. We had a rebalance shortly after. I still want to go in because this fair value gap was not in discount. This one is in discount, so I gave it a shot over here. Then we have this rebalanced price, right? This was a bearish one. This rebalancing price over here. Look at the accuracy, right? These wicks are going into that unbalanced price range, rebalance it over here, and then moves up. Now, I wanted to see this candle over here, this particular candle, just move through it and just go up. Once I saw it rebalance again with this price area and started to decline, I closed break even. You guys know this, go check out the stream again. You can also see this accumulation happening in this or on top of this fair value gap. Again, you don't want to see accumulation from high probable fair value gaps. You want to see a swift move away and that you're in the right trade, right? So that's why I closed break even. Price ran sell side eventually again, right? Now we're leaving a bearish fair value gap, which gets violated. We trade through it. This particular candle trades back into it, rebalances it, and moves up. So we have a small indication we're gonna go bullish, right? And we have this bearish order block, which gets violated too, which becomes a breaker after. So we have a breaker. We have an old fair value gap here. This was a bearish fair value gap. You see price trade swiftly through it, and I was not convinced, just like this, because the price delivery was not too clean on this one. So I waited until there was another fair value gap created. So it comes in this breaker multiple times, and that unbalanced price range, which is rebalanced over here. So we wick into it multiple times, right? Then you see this displacement over here. Now, this displacement over here was my cue to go in, because we had this old fair value gap holding, right? So rebalance price is holding on as a support. Then this fresh fair value gap got created. I entered, it was in discount, right? Because from this high to this low, this fair value gap is in discount. So we entered here, or at least I entered. Then price ran almost and took out this buy side liquidity, so I went break even. No reason to not go break even. I did not expect price to rebalance once again with this area of price. So this was not expected for me, but I guess this is just unlucky. The algo is never random, so it probably had a reason to do this once again. And if you look at this fair value gap, the bodies are still holding on to this fair value gap, so it was still valid. And then it took me out break even, and then we hit target eventually. So same thing over and over. It happens over and over. You can see it happening. Even if I just use my eyes and I cannot draw out any lines. Yeah, I can draw out any. So same thing over here, right? Let me just quickly use this one. This was a bearish fair value gap, right? And look at the bodies, right? This one should have been bearish, right? We trade through it, then rebalance it, come back into it multiple times. Obviously, after 11 is outside the kill zone, so this is outside the kill zone, this area. But you can see the bodies are holding on to this old fair value gap, which should have been a resistance, but now is being used as a support. So I don't think we have to recap this. Make sure to rewatch this if you are not grasping what is going on over here. This is one of the most important tools I use to determine where price is most likely to head into. So unmitigated areas of price, right? So fresh fair value gaps where price can retrace from, then couple it up with unbalanced price ranges. Very powerful. Same with oil, right? I sent out oil with this order block was unmitigated. We should bounce from it. We go to another unmitigated area of price, which is over here. See, unmitigated. Now it's mitigated again. Go back into it, right? And then let me just show you. Let me remove this. The accuracy once again. We have this bearish fair value gap. Traded through. Price redelivers into it with coupled up with a fresh fair value gap. And then we move up. It is happening over and over again. Don't get mistaken, this is what we should use, and it is very powerful. So there's another unmitigated order block up here, so I'm expecting draw to be there, but we'll have to see next week. So if you like this video, guys, let me know. If you have questions, also send me a message, right? It can be a little bit confusing. Make sure to message me if you have questions. And I think this is one of the most important videos. So make sure to really study it and backtest, obviously. So have a great weekend, guys, and we'll speak soon.